Hi, everybody. Hope you're doing well. Today, we're going to cover the Qs for the week of March 8th. We're going to broaden out a little bit when we get to the earnings to talk about some technology companies, Oracle, Sumo Logic, Semtech, that are announcing this week. There's really only one major Q announcing earnings this week, Broadcom. So we'll talk a little bit about them. But let's just jump into this. So last week, we predicted that this week would be volatile, small bear. Well, it certainly was volatile, up on Monday, down through the whole week, and currently is working its way back up. So certainly, and it started as we projected. It's through its pullback. We projected the pullback about 3 weeks ago now that it would pull back at least 5%. It's pulled back about 10% since then. So certainly been accurate over our key projections over the last couple of weeks. Hopefully you've followed the options on this and was able to navigate this vastly volatile 3 weeks successfully. This week, or the week of March 8th, we're expecting it to still be volatile, but start to work its way back up. It's pulled back quite a bit, down to $300. Not sure if it'll break $300, less than $300 today, but we'll have to see. We think that it's going to be volatile to bull. When we say volatile to bull, it means the week is going to be bouncing up and down, but ultimately end up at a high at the end of the week. Just like last week where we expected to be volatile to small bull. That just means volatile for the week, but end downwards. For next week, the reasoning is that, look, the Qs and the NASDAQ-100 still continue to grow. They're at 0.8 times higher than growth projections were for 2020. So they're definitely knocking down the park. The growth is good there. Pullback certainly was expected because it was starting to get overinflated. So the pullback was good, needed to happen to kind of work its way out and pull back to what is normally expected from such a rapid growth of about 60% over the last 12 months. So it was a pullback, so it doesn't get too heated. Only bigger concern around this is the NASDAQ-100 in general. That growth is starting to flatten out. Still, it's hugely high from last year at this time, but they're starting to flatten out a little bit, which is good. But let's hope that flattening doesn't turn into decline, and that's why it's a yellow as a concern. Unemployment, general macro conditions are still bad. Last week, for the video, we actually got banned from public search just because we talked about some macro conditions that seem to be highly sensitive with the folks at YouTube. So we won't mention any specifics around why unemployment is of concern, just that it is concern as we don't like to get banned. So hopefully we don't get banned this week. So let's look at the growth. So predicted growth, still, like I said, our growth projections are showing 1.8 times from last year. You can see that. Last week we talked about how the analysts were a little bit flat and they probably needed to up their expectations. They have done that this week, but there is a flattening over the last couple of days, which we have seen. While the general curve is still up, you can see in the red square that there is flattening. There's not the big normal bounce as usually happens. I think part of this is getting down towards the end of most folks' Q3s. So hopefully it's just normal flattening as they've hit their growth projections and starting to ramp down a little bit for the quarter. If this is looking like a decline next week, then things may be interesting for Q1 announcements. But right now, things are looking good. Analysts have caught up with what our growth projections were. Generally, things are looking great. Pullback was good from, again, not getting it too heated, but growth projection-wise, still looking very, very good for the year. Next week earnings, the really only big one from a Q perspective is Broadcom. We talked about them last week. It happens. People change their dates all the time around announcements. That's probably the third or fourth times it's happened over the last 6 months that we've been doing this, so apologize for the date. But they're announcing this week, I believe, on March 10th. Broadcom, been tracking since 2013. Their stock symbol is AVGO. There's a whole story around that through the acquisition that happened. The Avago CEO, which Broadcom acquired, really wanted to keep his name, his legacy. So part of the acquisition deal was that they keep their stock symbol, which is AVGO. So that's why Broadcom doesn't really match to what that stock symbol is. But Broadcom's announcing their, chip manufacturing company. Semtech is another one that we'll cover as well. We talked about them, so won't get into too much detail, but they're looking good. They had spike growth since October, very much recovering. Marvell announced this week Broadcom is expected to do better growth, better curves. So we're expecting that they should be in a good position either this quarter or next quarter. They are announcing Q1 results. So Q1's usually a little bit flat, but they seem to be growing and catching up from the downturn that occurred over the last year, but looking very, very good. The other two, we're just going to jump into the application and take a look at it. So this is the Prep to Grow application. It's our AI big data platform called Grow. It does stock recommendations and screening. Essentially, it's AI driven. We're coming out with some new features in the next weeks that we're really excited about. But for our subscribers, if they're looking to find anybody announcing in the queues, essentially they would go through, select their sector, or select an ETF in the case Qs or FANG. If they want to see who's announcing, select the next earning dates and just apply. They could also save it, and so they can be alerted to new companies that are coming out and doing their earnings announcements. So this gets sent out to them every morning. It gets texted to them as well. So I've already gone through and done all that. And so I'll just jump into our lights. So this is a watch list we create within the application. Also, any save screen you have is part of that as well. So the three that we're going to cover, Semtech, Sumo Logic, Oracle, all announcing next week. Semtech, analog mixed signal company. They're based in Southern California. Being in Northern California, boy, we really don't like Southern California too much, but these guys are looking very good for their earnings. Their stock projections, we have a 96% success rate of over 30 days period of time. We reckon them today actually as a stock, and they've gone up 2.35% already as today. We're expecting their stock to hit 72.86. So certainly expect them to go back up to what was their 5-day, 20-day moving averages. So these guys are looking real good. They announced on the 17th, so I apologize. This is a week after. But certainly it's a good company, having good growth, mixed signal, analog, very good space, similar to what Broadcom does. A little different, but related within the mixed signal digital processing side of things. Good company, expect good things from them. Growth rates look very good. Excuse me. Semtech, they do cybersecurity. We recommend them today as a put. They are as flat growth gets. They have not budged at all over the last 5 to 6 months. We're expecting them as a put. So as a May 21st expiration date at the 25 strike price. We're expecting that this one to gain about 51% change in terms of predicted our option price change. We're having 95% success rate for 30 days out. So this looks good from that perspective. It doesn't quite fit our strategy just because the 5-day success rate is less than 90%. And we usually like 5-day success at 90 and a 30-day success at 90% success rate. So that's kind of the magic numbers for us. But again, we expect them to go down. I think they're flat today. Yeah, they've been pounded over the last couple days below their 5-day, 20-day, and near the 200-day. They're flat. I'm not surprised. Cybersecurity is hot. Don't know why they're not growing. They're a Redwood City company, Bay Area, but they are flat. Next, Oracle. They actually got a big bump from Barclays today. We had recommended Oracle on March 3rd as a put. These guys hit pretty good. They actually, if you look at the volume up in interest rates, somebody made a big bet on them as well. to go down. We're not very good at predicting Oracle in terms of puts. It's about 70% 30-day and 67% 5-day. But if we look at their growth forecasts from an algorithm and its support of having a put, yeah, I agree with it. Whoever this Barkley analyst is looking at it, I don't see it. Not sure why they would do a raise on them. Maybe Oracle's going to do an acquisition or something of that nature. I like Oracle. I know a lot of people that work at Oracle. So, flat failed on the TikTok acquisition. Generally, in the space, they're getting crushed. Most of the spaces, either Workday, Salesforce, ServiceNow, SAP. If you look at Oracle, they're just not in the mix. They really are losing tremendous amount of market share. Our algorithms, if we look at it, we track sales. We track who's buying what in real time, who's using Oracle products, who are not. And Oracle is consistently losing market share. So I hope they do something. I like Oracle, but I do not have hopes for them long term. Certainly, Barclays saw something. We clearly do not. Oracle's about 10% projected growth rate year over year. So maybe an acquisition or something big that'll help prop it up again, but it's looking flat, looking like a down. And they're announcing their Q3. They're on a wonky kind of fiscal year schedule. So they're going Q3 heading into Q4. So let's jump back into the rest of the Qs and see what's going to happen more over the next 30 days to 60 days. So this is the analysts' forecasted revenue and EPS. So they made a little bit of a bump this week. We thought they would. More on the non-FANG side of it. We separate out the FANG pluses, which is 15 companies that make up 65% of the Qs holding or really drive the NASDAQ and the Qs and the ARKs. ETF. So we really separate those things out because they move it if they move. We see that non-FANGs and some of the non-ARKs looking really good. They have actually now looking like more growth now than FANG pluses cumulative, which is great. Usually it's pretty flat. FANGs are kind of making it a little bit flatter growth-wise, but still higher than ever for the FANG pluses. It's good to see that the others are starting to pick up the pace a little bit, contribute, which is very good signs for the Qs in the next couple of weeks. Volume finally picked up, stock volume. People are back into it. I think more around the prices were very high and people thought it was a good time to buy, hopefully. We certainly have sold. We always sell going into earnings anyway, so we were actually out of a lot of our positions. We got back in on some of them last week, most of them again this week. So hoping that it'll continue to rebound. But again, volume is back up, which is good, more at the level you would expect at this point in time. Well, actually still less, right? So 22,000 last year at this time to 15,000, but starting to climb back up. 30-day predicted stock price on inclining for the FANG pluses. On the others, kind of flat to decline. Looking at the numbers, the outcomes are probably going to start to up the prices on this. Cumulatively, the Qs, our price predictions are up and growing from last year this time. Certainly was overinflated, when you look at the 667 number here, which is supportive why it went down. Just too overinflated. But our price predictions are continuing to go up with the pullback. Again, pullback was good. Started to get a little hot on the Qs, but so it's a good pullback. Long option volume, calls. About 3 weeks ago, we said, or I'd said, the puts volumes, we haven't seen this high predictions around puts. Clearly, the algorithm saw that there was going to be a pullback, which occurred. Calls are back in the game, back on the table. So it's a good time to start to buy back in. Last week, you said get your limits ready to buy back in as it starts to go up or your trail stops. So we expect next week to be still volatile just because of all the things happening in the market or macroeconomic conditions, but high tech. No reason why it's not going to go back up. Bear versus bull, same thing. Pulls are down, or excuse me, puts are way down, calls are way up. So that's what we like to see, and that's why we're projecting a bull. Last week, puts were still very high. Again, this week pullback, so very excited to see that it start to pull back for our predictions. So, and our algorithms predicting what's going to go. So, for next week, volatile, it's going to bounce around a bit, but should end at a bull. So, hopefully, you all wrote it out over the last 2-3 weeks, and hopefully, our guidance has helped around that. But if you have any questions, always reach out to us. Happy to help in any way we can. If not, happy trading, and we'll talk to you next week. Take care.